Welcome back, everybody, to another episode of Multifamily Report. I'm your host, Travis Watts. We cover market news, industry updates for you, the multifamily investor. In today's episode, we're going to reveal the latest CBRE report. This is essentially a 2023 forecast with a bit of recap of what happened in 2022. So if you're going to be investing in multifamily apartments this year, this is information you're going to want to be tuned into. If you'd like more detailed information and you want to download this entire report, you can visit cbre.com for more information. But I'm going to dive right into the highlights. And the first line item of business is CBRE predicts that U.S. multifamily housing is expected to perform above expectations in 2023, despite the headwinds, despite the looming recession that we have on hand. There's very strong housing fundamentals. They predict that occupancy will remain around the 95% range, which we've been seeing the last couple of years, and drive rents approximately 4% for the year. Now, a 4% rent growth prediction is, in fact, lower than what we've seen over the last 2 years, but we have to remember that we saw exceptional rent growth over the past 2 years, and eventually things have to normalize and settle down. So they're still expecting an expansion here in 2023. Something else I found pretty interesting from reading this report, they took a look at owning a single family home versus renting and that price gap. And it's in fact the largest price gap on record, with a single family home payment being approximately 57% more expensive than your average apartment rents. Another interesting tidbit from this report here is that there's roughly 800,000 apartment units that are currently under construction, but only about half of those are expected to be delivered in 2023. And while those may seem like very large numbers, and they are in a sense, it's only going to add approximately 2.6% of the total inventory available. As we all know, developers are being hit with costly interest rates and supply chain issues and wage increases. And so that's causing an overall slowdown to new starts, which is what we desperately need in this country. Another interesting fact, and something that we talk a lot about here on the channel, are the historic returns of multifamily apartments nationwide. And over the past decade, CBRE points out that the total return over multifamily has been 9.3%. So a very solid return despite the turmoil and the pandemic and everything that we've been facing as far as headwinds are concerned. Something to keep in mind for a little perspective looking forward. Something else to consider, since we've been in a rising interest rate environment, CBRE points out that the cap rate expansion has been approximately 75 to 100 basis points already, and they expect that to continue expanding throughout 2023. And they discuss briefly in this report that there's a bit of a slowing in transactions. In other words, since interest rates have been on the rise, there's less groups and less individuals selling their multifamily assets. But they do point out that well-located and high-quality assets that are ending their business term are still likely to be put up for sale in 2023. Every market's going to be different. Every market's going to be impacted differently with this looming recession in mind. And so this can create buying opportunities for those in the market looking to buy the dip, so to speak. So I'll leave you with 6 takeaways from the CBRE report. Number 1 is multifamily is set to continue growing and moving forward with solid fundamentals through 2023, albeit at a slower pace. Number 2, so many people are priced out of the single family housing market in terms of would-be buyers, and so they are renting as an alternative. Construction remains slow and is, in fact, being impacted, with only 2.6% additional inventory expected to be released throughout 2023. The historic performance of multifamily over the past decade has been 9.3% annualized as a total return. There may be less multifamily apartments listed for sale throughout 2023, which is going to keep the supply-demand balance strong, meaning there's still going to be a high demand for the asset class with very limited inventory to choose from. And as pricing continues to adjust, as CBRE is predicting with cap rate expansion, this is still an opportunity for those in the market actively investing to so-called buy the dip as an intermediate to longer term investor. Something to think about. I hope you found some value in this short episode. These were just a few highlights from the longer report, again, available at CBRE.com. You're watching Multifamily Report. I'm your host, Travis Watts. If you ever have questions on this topic or any others on the channel, you want to learn more about multifamily apartments or passive income investing, you can reach out to me at travis@ashcroftcapital.com. Thanks so much for watching. Have a great week, and we'll see you in the next episode.
Thank you for checking out our YouTube channel. To stay up to date with Ashcroft Capital or to view current offerings, please visit avaf3.com.